Good morning, everybody. It's Harry Swaminathan. Sunday morning, actually, 7:20 a.m. And I'm looking at a really good trade for and this trade would be applicable for everybody, whether you have a IRA account or anything like that. So the premise of the trade is if you look at the VIX, on Friday, the VIX came down to about 11.98. So 11 really is the lowest that the VIX really gets down to. So the 11 handle is definitely at the lower end of things. Now, very rarely does it go below 11. So now the VIX is so low, it's really a great time to put some strategies that will take advantage of an increasing VIX, so of an increasing volatility. So the way we do that is the ideal trade to take advantage of that is going to be a straddle, and of course we come down to the spiders. So if we look at the spiders, I have a straddle right here. It's a 10 contract position in October. So October has about 75 days. Obviously, we don't plan to hold it till then, but we want to give it enough time because a straddle has double theta decay because you have two long options, so you have twice the theta decay. And therefore, you want to minimize that. Now, you could minimize it further by going to November, but as you go out further, you're obviously going to pay more for the option prices. So even here, you can see if you buy a 10 contract position, this will be a $7,640 trade. However, you don't have to take 10 contracts. You can do 1, 2, 3, 4, 5, whatever size is appropriate for you. The other reason is, so if we went over to November for the same straddle, you're going to pay 9,290. Now, you don't want to come before October. Like September at 47 days is too soon, and you'll see that if we did September, look at the time decay. You're going to lose about $62 a day. And in October, it's going to be about 50. So I think the sweet spot is October, 75 days. Normally, we would want to hold the straddle for about 2 to 3 weeks and try to take it off by then. The straddle risk profile is non-directional. It starts off very non-directional. But as the stock moves, you're going to accumulate either positive deltas or negative deltas. And of course, the gamma is going to be working for you. So, in general, this is a highly theta vega, a vega positive trade. So as volatility goes up, which we can expect it to, then the straddle is going to do very well. And we don't care which way it moves, as long as there is a big move in either direction, which the spiders have shown so far. So that's the trade. We're going to put this in on Monday morning. It's the 171 straddle because you can see it's the spiders are very close to 171. It's 170.89. So that's about 171. That's about as close as you can get to 171. So this is the straddle. It's a trade for Monday. Our hold time for this is probably going to be about 2 to 3 weeks, maybe 2 to 4 weeks. But primarily, we are going to look to make a big gain from an increase in volatility. From the 11 handle, if the VIX goes up to a 15 handle, this trade can produce about 40-50% returns right there. So that's the trade. We'll speak to you soon. Thank you.